I guess Liz Truss kind of tried something different. She did try maybe to cut taxes a bit more, grow the economy, but that led to a spike in interest rates, in bond yields, which might have been orchestrated by the Bank of England a little bit, because they don't want to rock the boat. The Bank of England and the deep state of the UK, the people who run everything, they want to drag this on for as long as possible, because if you wreck the whole system, and by wrecking I mean you wreck the currency, the debt, government debt collapses, there's bankruptcy, the banks will collapse as well because of that. Everything will implode. That it will be quite dramatic, and a lot of people are going to lose a lot of power. Thursday, October 10th, 2024, Monaco 64, home of alternative economics and contrarian views. First of all, I'd like to say that I hope all of you who are watching from Florida are okay. Reading this morning here in the UK, and it's 8:30 a.m., it looks like Milton wasn't as strong as expected, but it's creating a lot of chaos and a lot of problems, especially for Western Central Florida. I have a niece, and her family is on the other side, and I saw some clips on WhatsApp that she sent. They said they'd never seen it as bad as that. They're okay. Yeah, so hopefully all of you are okay. And actually, I'm going to segue talking about a hurricane and the fact that Milton doesn't look like it was a force 5, which is, thankfully, it wasn't. But we're going to talk about another kind of hurricane today, and it's an economic one that is barreling towards the UK, which is, of course, completely different, but it's made out of debt and inflation and big government. And that's what we're going to talk about today, because we've got a budget that's coming out on October 30th, and there's a lot of talk about how the new Chancellor of the Exchequer, who's the equivalent of the Treasury Secretary here in the UK, how she's going to try to navigate this. But unfortunately, yeah, it's a force 5 hurricane, and I don't think it's going to go down like Milton did. And economically, politically, socially, we're starting to feel already that the heavy winds in the last few years. It's difficult for me to say when this economic hurricane is going to make landfall in the UK, but unfortunately, it's a done deal, and there's very little that statists, and by statists I mean the politicians, can do, because their first interest is not you, and this might sound harsh. Their first interest is their power, and the power of the people who give them money and support, which is the military, industrial complex, and the bankers. Unfortunately, that's what democracy really is. So we've been reading here in the UK for the last month about this budget on October 30th. There's been a lot of speculation of how they're going to have to punish the wealthy retired, how they're going to have to punish businesses, because supposedly they have a 22 billion pound black hole. There's talk about how they're going to come after inheritance even more, or payroll tax increases for businesses, not for individuals. And they've already done stuff for people that are usually identified as labor voters. Like they're going to cut the winter fuel allowance, which will take out 10 million people from receiving this winter fuel allowance. And this is for pensioners or retired people. They're already going after them. So yeah, there's a lot of worry that they're going to come after people's investments, private pensions, and many other things, and increase capital gains taxes. And unfortunately, I think we need to wait until the day to see what they do. But it doesn't look good. We're seeing a lot of talk of people leaving the UK, people with a little more wealth, millionaires or even billionaires. There's an article here today. Reeves, that's the chancellor, needs up to 25 billion of tax rises to avoid austerity. Budget risks pushing tax burden to highest ever peacetime level, IFS warns. So before we go into this article, I just wanted to show you here that I've been warning about this for many years. I have a playlist, the UK Economic Collapse 2021 and Beyond. I've been warning since 2021 about this. And why? Well, because of the debt burden of the everything bubble that has been created since '08. And '08 was really a watershed for everything, not just here in the UK, but in the US and in Western Europe. We unfortunately had to bail out the bankers, and we had to bail out people who took on too much debt to buy their homes. And how do we do that? Well, the governments took on a huge amount of debt, and the central banks obliged by increasing their balance sheets massively in the trillions. And how do they do that? Well, they just created these reserves or currency out of thin air to buy the government bonds. The government bonds that had to be issued so the government could borrow. And the reason why the central banks had to get involved is because normally no sane investor would have bought these bonds because our governments are bankrupt. So the central banks have had to buy it to keep interest rates low, to keep the debt bubble going. And they kept that for like 14 years until 2021, 2022. They did even more QE for the so-called pandemic back in 2020. That was another unnecessary exercise. But my suspicion is that the effects of the first batch of debt, Tsunami from 2008, was losing its impact. The banking sector was under threat. We saw the repo crisis in 2019. So they had to engineer something and say, oh, we're going to put you in your house, lock you up for 240 days, and we're going to pay everyone to stay at home, or almost everyone. And we're going to indebt the country even more. We're going to have the Bank of England buy even more bonds and keep interest rates at zero or negative in some places. And they did that. They thought we wouldn't have rising prices. We've been warned, since Bernanke, really, in 2002, he warned that the great danger for the world was deflation. And that's why I'm always really peeved when people talk about deflation and inflation, because they use the wrong definition. Deflation hasn't happened, well, since the 1930s, or even if it did happen a bit, I don't think it did, because real deflation is when the money supply shrinks massively and your currency becomes worth more and prices fall of things and everything. But that hasn't been happening. We have had inflation here in the UK, as you can see here from this chart, massive inflation since the year 2000, since the beginning of the century. So what is this chart? Well, this is how many grams of gold a pound can buy. So if we're having deflation, this chart would have been going up from left to right, not down. So why is that? Well, because if the currency was really going up in value and buying more things, which is what happens in a deflation, yeah, we would be buying a lot more gold. But as you can see, we're not. And the pound is down 91% in the last almost 25 years, 91% versus real money. So that's been the problem. And now, of course, in the last 2 years or so, they've had to raise rates. They've had to end the party. And why did they have to end the party, the central banks? Well, because you can't. Things don't last forever. There's such thing as cycles, right? And now, not even the other side of the political aisle could do anything. We had 14 years of the conservatives. They couldn't do anything. And it's no one can really do anything outside just like crashing the whole system and starting from scratch again, because that's what needs to be done. I guess Liz Truss kind of tried something different. She did try maybe to cut taxes a bit more, grow the economy, but that led to a spike in interest rates, in bond yields, which might have been orchestrated by the Bank of England a little bit, because they don't want to rock the boat. The Bank of England and the deep state of the UK, the people who run everything, they want to drag this on for as long as possible, because if you wreck the whole system, and by wrecking I mean you wreck the currency, the debt, government debt collapses, there's bankruptcy, the banks will collapse as well because of that. Everything will implode. That it will be quite dramatic, and a lot of people are going to lose a lot of power. So they had to stop Liz Truss, and they brought someone who would listen and not rock the boat. And I think this new government is doing the same thing. They're coming up with more taxes, as you can see, the highest tax burden in peacetime. And they want to avoid austerity. But who's going to avoid austerity? Well, it will be the governments and government spending and the bureaucracy, the public sector. Because what this is going to do is it's going to impose austerity on the sector of the economy, the private sector, that creates the wealth. Because governments don't create wealth. Governments don't invest. Governments just take from you who produces the wealth in the private sector and spends it and gives it out. And it's always really inefficient and corrupt. And why is that? Well, because they have a monopoly. So there's no competition. And we're going to go through this a little bit here, because what they're talking about now, and this is why I think they're digging an even deeper hole. But as I said, they're cornered. No matter who's in power, they're cornered. The deeper hole they want to dig is that they want to increase the debt even more by changing the definition of the debt that the government takes. They're going to say, well, this debt is going to be for investment in the economy. But have you ever seen government investing and making a good like result in the economy? No. Investment should be left to the private sector, to people who have worked hard and been able to save and put that money to work. Government investment Yeah, maybe something will work out a little bit, but in the end of the day, it's going to be just as bad. So the debt's going to get worse. It's going to, they think that the government spending, government investment, more debt will trickle down to the private economy, but it won't work, this trickle down. Trickle down doesn't even work in the original sense of it. In the 80s, we were told that if the rich get richer, if the stock market goes up, that wealth will trickle down to the lower the lower percentile of wealth, or of people of the working class. And we've seen in the U.S. that hasn't happened. Wealth inequality is even greater, and it didn't work in the private sector. It's sure as heck not gonna work when the government does it. So unfortunately, there is no solution, and they're gonna come after. Yes, they will probably come after a lot of your wealth, especially if it is in the financial system. And a lot of people's wealth is if you've been able to put your savings into a private pension, into insurance policies, into real estate as well. They're going to come after that. If you have a second property, they're going to come after the inheritance. So you might be asking, so what do we do? Well, it's really hard. One thing I would say is, well, it's not just about investment. It's about what people expect from government. And here I'm talking more to the people that haven't been as fortunate to put enough aside for themselves. And that's that the government is going to take a lot of things that they promised they'd give you. And a lot of those promises are based on what you've been paying into the government through taxation, national insurance. And I've always said here on this channel, don't count on government, because just like they can give it to you, they can take it away from you. So unfortunately, you just have to try to be self-sufficient, self-reliant, and not depend on them. And that's the way I've tried to run my affairs and my family's affairs. And it's interesting because I just turned 60 on October 3rd. And here in the UK, right now, if you're 60 and you need to take some prescription medicine, it's free. Well, not really free because you've paid into the system. But now they're talking about that they're going to end that for people from 60 to 65. And I don't take much prescription medicine, but I have to take three pills because of the heart surgery I had in April. And so I think I'm going to go down to the pharmacy today to order the next batch before October 30th. But it will probably be the only month that I don't pay for it. But I'm not concerned because I can afford to pay for that. But a lot of people won't, because they've put too much faith and confidence in the government, that the government is trustworthy, that they will give you what they promise you. And what about the state pension? Well, they're probably going to increase the age. I mean, when I started paying into it was 65. Now I have to wait until I'm 67. And you can bet that it's going to buy a lot less than it buys right now, or it bought 10, 15 years ago. So that's one of the reasons why I've been trying to get out of the system by buying physical gold and silver outside the system for the last 22 years. And it's paid off partly. Well, it has paid off because gold has gone up almost 10% every year since the year 2000 in British pounds. And that is a reflection of that chart that I showed you there earlier, that the pound has gone down 91%. The thing about gold in the UK is that if you buy sovereigns, Britannias, be it gold coins or silver coins, they're coins of the realm and they're capital gains tax free, exempt. Yes, they could change that, but I haven't heard anything about any speculation about that. So there are other ways of saving outside the system. The gold and silver is more of a monetary liquid way to do it, because you can change it into the fiat if you have an emergency. But there's other ways like antiques, fine watches, wine, whiskey, all collectors stuff, or cars, collectors, classic cars. These things are all called chattel, and they're not part of the financial system, and it's harder for them to come after you after these things. But if your investments are in the stock market, it's a bit more difficult. Also for ISAs, like right now you can put 20,000 pounds tax free every year, and I'm trying to use that as well, because I think they'll probably cut that to like 10,000 or even less. And I think there will be an announcement on October 30th about that. So yeah, we don't have much time. October 10th, 20 days. And we have to see, of course, when they're going to implement that, a lot of the policies from. It could be the next day, or it could be from April, when the tax year starts. So to summarize, it looks like the chancellor is going to indebt the country even more to try to solve a debt problem. And the reason she's going to have to do that is because they're cornered, and our system is based on a fiat currency debt-based system. So unless the debt keeps growing, the whole thing implodes. But the flip side of that is that eventually the currency becomes worthless, because people realize and investors realize that they will never stop inflating. And I think that's going to be reflected in the price of gold in pounds, and also in the gilt prices, government bond prices. Yes, gilt yields have stabilized since 2022, but I see them going a lot higher. And even if they come out, the Bank of England, and start QE again to make those to buy the bonds to keep yields low, that's going to destroy the currency even more in terms of it being able to buy real things, and the price of gold will reflect that by going a lot higher. So that's where we are. I won't go through the markets right now. Suffice it to say, there's some people saying that we made all-time highs in the Dow and the S&P yesterday, and it looks very similar to what happened in 2007. Like the Fed cut rates by 50 basis points on the same day, September 18th. And then the market made a new all-time high on October 9th, and the same things happened. And we know what happened from 2007 to 2008, right? But I don't know, that might just be coincidence, or the cycles are playing out again. As for gold and silver, yes, it's going to be volatile, the paper price, but believe me, it's your it's your safety valve for the incoming hurricane, and it might even be, I don't know if there's a 4-6, but this is going to be really bad. And as I said, I don't know when it's going to hit. But I think we will know when it happens, and hopefully we'll be prepared. Not even people that prepare for it through having their financial house in order. Yeah, they'll have difficulty too, even I and my family, but I think we'll be better positioned. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.